Welcome to our first session in a new series designed to help you get better financial control of your business. Now, Sustainable Scale-Up Cluster has created this series, recognizing that there are a number of our beneficiary businesses not getting the best out of either their accountant or the accounting system or both. So this is in terms of making the most of functionality available to effectively deliver on compliance requirements like VAT, PAYE, pensions, etc., but also with regard to setting yourself up to provide the insight that is required to make better business decisions. How do you set up so that you can easily get the right information out of your accounting system when you need it to deliver that insight on things like, say, product profitability? So this is a short series where we'll be discussing areas that you may wish to consider afresh and potentially help us to change how you do things to improve your efficiency and insight. Now, our first session today focuses on setting up your for success, and I'll be leading our panel through a number of questions to help you identify areas where you may feel that you need to change how you're operating. This will hopefully be the beginning of the journey for you, where we're looking to support you after these sessions in actually processing changes through how you use your accounting system. So before I start, can I just ask that you all go onto mute if you're not already? We'll be using the chat function. So if any questions occur to you as we go through, please do feel free to pop it into the chat function, and then we'll pick those things up at the end. The session is going to run for about 40 minutes in terms of a guided discussion, and then we'll have chance at the end of that to look at some of the questions on the chat function and also anything that you want to raise at that point. So without further ado, in our panel, we've pulled together an accountant and a non-accountant from relevant business experience as far as the cluster is concerned, but also we've got an accounting expert from an accountancy practice. So I'm going to sort of hand over one at a time to the panel to actually introduce themselves. So firstly, Wayne, could you introduce yourself?
Yeah, sure. Welcome, everyone. You've been treated to several accountants, so I'm sure you're very excited to get stuck in. Yeah, I work for Old Mill. It's a accountancy practice based in the southwest of England. I've been chartered accountant for about 10 years. I've done audits, I've done the bigger side of things, and I've also done smaller accounts as well. So working with small business owners, helping with their cloud accounting and also helping with their outsourcing. So the idea is I can take that experience from the bigger businesses that I've worked with and then help the smaller business, and that's sort of what I do day to day. Thanks,
Wayne. And John.
Hello, everybody. Good afternoon. I'm John Taylorson. I'm the non-accountant, so I'm probably the poster boy for how not to do it. Yeah, my background's food, drink, and agriculture, but I've been all involved in running small businesses and large businesses, and very much involved in the accounting function.
Thanks, John. And Kevin.
I'm Kevin Young. I'm a regional manager on the cluster. I'm an accountant, sadly. I've got a lot of experience in working in the food industry and healthcare as well. So I've got many years of experience of working for globals and also the small SMEs.
Thanks, Kevin. Great. So we'll get on to some of our questions then that I'm going to lead the panel through. The first question is, what are the benefits of keeping accurate and up-to-date financial records? And I'm going to ask John that question first.
Thanks, Andrew. What are the benefits of keeping accurate and up-to-date financial records? I mean, rather obviously, it sort of keeps you out of trouble. But the important thing about that is actually your headspace, being able to worry about those things you need to worry about and perhaps not have to lie awake at night worrying about things that you worry might be going wrong, but you're not sure. And I think having the accounts under control and at your fingertips gives you that, I'm not going to say peace of mind, but it is going to give you that reassurance that you know what to worry about rather than those things that you perhaps shouldn't have to worry about immediately. And it is things like, which we'll talk about later, things like compliance and knowing that VAT and payroll and HMRC are up to date. So yeah, your head.
Thanks, John. Wayne, would you like to add your responses to that?
Yeah, I'll go into, I suppose, a little bit more detail really in terms of why I think it's important to have up-to-date financial records, and there's loads of reasons that I could go on for hours, I suppose. But I suppose one of them is to make sure the business is profitable, and that's not just profitable as a business, that's also the individual types of services that you're offering. So if you can capture sales and costs per product line, you can start to see which ones are most profitable and then which ones are less profitable. And then off the back of that, you can then focus on the ones that are a bit more profitable. And then, you know, if you can reduce the ones that aren't, you can reduce them, depends if you need them or not. So that's one thing. You make sure that divisionally we're profitable. The other thing is we can check if costs are too high. So we can run through the P&L and we can see what the costs are, which ones we can get rid of and which ones, you know, we really don't need to keep. Then we've got the other side of it, which is understanding liabilities and managing cash flow. So if we've got up-to-date records, we can see what assets we've got at any point in time. And we can also see what liabilities we've got. So looking at the ratio between those two, we can see if actually over the next few weeks or a few months, we're going to be okay in terms of cash flow, because you can see, right, I've got more assets and I've got liabilities, that's a good thing, or it's the other way around, you might have to look at some sort of funding. And then the other thing I want to cover off is accounting and investment. I mean, if you've got up-to-date records, then we can do the VAT return pretty easy. Also, if you're on a cloud accounting software, your accountant can log in and it can start to look at some of your data. So although you think your accountant might not be looking or hasn't met with you for a couple of months, you know, they can log in and they can start to look at that information. And then the other one that people might not think of so much is if you're looking to sell the business or if you're looking for investment, then having up-to-date records can be really important. Because, for example, if we're looking to sell the business for someone, that investor will want to see confidence. They want to make sure your records are clean and tidy, up to date. But B, if you're paying off loans, if you can show throughout the end of the buying process you've paid off a little bit more loan, then you get more money for the business. And then it's the same for banks. You know, if they can tell you've got accurate records, it's a bit more confidence, and you're more likely to get that loan through. So I've just rambled off quite a few, but hopefully useful.
Great, thanks, Wayne. So just the question again was what are the benefits of keeping accurate and up-to-date account and financial records? Kevin, what's your thoughts on that?
John and Wayne have covered majority of the points. The key thing is you feel in control. So again, your head is in the right ballpark, and again, you're able to make important decisions and prioritize your workload effectively. Yeah,
thanks, Kevin. So moving on from that, sort of, some people might be thinking, well, isn't this what my accountant is for? Why do I have to worry about this? And maybe Wayne, if you could just sort of follow up again on that, what your thoughts are around that.
Yeah, sure. I think that firstly, as a business owner, that there's two things which you absolutely have to be in control of. And one of them is going to be strategy, where you think the business is going to go. And the other one is your finances, because you really need to be on top of that. If you run out of cash, then you can't continue trading. I think there's a little bit of an expectation, a gap about what the accountant does. So accountants will pull together your information to file it at the year end. They'll fulfill your statutory obligation. And then they'll also make some adjustments at that point to make sure you're okay. But the other point is, I mean, if you can file your accounts within 9 months, so we could be 9 months out of date at that point. So the accountants made those corrections and then you're talking about it, you might be talking about, you know, if you think about where we were 9 months ago, we're in a very different position to where we are now. You've got a bookkeeper, which is another thing you could go to. So bookkeeper, they vary in terms of quality. Some will just literally post to certain places and they won't check balances. They're not going to make you aware when you're running out of money, when, you know, debtors aren't paying you. And then the other option you've got is the outsourcing. So you could pay someone to run your whole finance function, and that is a service that accountants offer. And that means they take off everything from you. So they take away your bookkeeping, they chase debtors for you, they pay creditors. And then you also have meetings with you as well. So they discuss how your business is getting on. And then, you know, talk strategy, that type of thing. But the point is that's a much more expensive service. We're looking at, you know, a full-time employee wage, basically, as opposed to what most of you probably have, which is that year-end accounts process. So there's different things to consider. I think there's an expectation gap between what people think the year-end accounts process is and what they actually get.
Thanks, Wayne. And Kevin, what do you think about the accountant, the role of the accountant?
The key thing to me is the director, the owner of the business is the the key responsible person of that company. So he's he's the ultimate person who needs to be at the compliance. So again, Wayne indicated going concern, etc. So it's it's up to you to make sure that you've got the cash to keep trading at that point. You have got responsibilities if you haven't to take action. So the key thing is you need the information, and as Wayne says, an accountant could be 9 months too late. You need to be on it as you're inside the business and you're trading as you see fit.
Yeah. And John, I know you like talking about accountants. What's your perspective?
Can't speak highly enough of them. Yeah, I think Wayne's point about what is an account, what they're there for, it's almost what they're almost not there for, is that they're not there to take responsibility for your profitability. That's your job. And the accountant will help you with that information, but you've still got to touch the numbers yourself. I think where the accountant can be really helpful, particularly for a food and drink business, is things like VAT liability and what is VATable and non-VATable. And we can always make the glib joke about VAT for food and drink. If somebody's explained it to you, then they haven't, and you've understood it, they haven't explained it properly. But there is something about knowing, particularly if you're going to do the counts yourself in terms of inputting stuff, making sure that you had the advice from the accountant about where the VAT liabilities lie with food and drink, because that way you don't have to worry about that one in particular. And of course the compliance thing, at the end of the day, as Wayne said, it's the profitability thing. It's no good if you've left it 9 months past your year end to sort out the compliance part of your accounts. It's that interim step of ensuring that you've got the information to make sure that you are running a going concern.
Right.
Just noticed something on the chat that popped up from Christian. If you're tax planning and you want to speak to your accountant about it, I'd make sure you do it well in advance of the year end. So if you make sure you're aware of what your year end is, you can go on Companies House and you can find it. The point is that normally you have to buy assets or do a bit of pension contributions. And even with pension contributions, they have to be paid before you can get the relief. So you might have said you're going to pay them. If you haven't actually made the payment, then you can't get the tax relief. So just say if you're going to do that, make sure you do it ahead of time rather than after year end.
Yeah. And just on the VAT element of that question, the VAT, it is important to make sure that you have had advice from your accountant to what the VAT treatment is on either inputs or outputs. And remembering that just because somebody's charged VAT on an input to you, you need to make sure that that is right, because if you're reclaiming the VAT and it turns out that it wasn't VATable, then that gives you a problem as well. So, accountants are very good at ensuring that you are doing the right sort of tax treatment on these things.
Thank you. So let's move on to accounting systems. And just look, maybe Kevin, to start, could you just explain which are the most popular accounting systems as far as you're aware and why?
Yeah, so at this level of business, the three most common systems are Xero, probably QuickBooks and Sage. There is free agents as well, but the first three are the key ones we see at this size of business. They're usually recommended by an accountant or a friend or a family member who's had the similar size of organization, has experience, or potentially the owner has had experience in these packages before. They're affordable, and the functionality and user friendliness is quite not basic, but you can get your knowledge basis from it, and they are usable. They offer reporting, calculate payroll, and you can do the VAT and compliance, because the key thing is in all these popular accounting systems with taxed on digital, they offer the being able to pay tax functionality digitally. And also there's a number of add-ons for like ERP and ERP systems that can be bolted onto these to help you run your business.
Just on that, as you say that, what's an ERP system?
Enterprise resource planning tool or a manufacturing enterprise tool. So basically it's how you run your business. It's a production scheduler. It can hold your bill of materials, your costings, etc. So it's the process of you manufacturing your goods, and it tries to account for that as that process happens, and then that transfers into your accounting system.
Thanks, Kevin. Wayne, could you just maybe explain a bit more about the differences between the three main ones that Kevin's mentioned, so QuickBooks, Sage, and Xero?
Yeah, sure. I think it's worth having a little bit of background about where the three different systems come from. That's probably going to explain it as well, and the difference between them. So everything used to be desktop based. We'd have those Sage and QuickBooks always on desktop, and that's what people would use. You had to access it on your computer, and you couldn't access it anywhere else. And then this software came along called Xero with an X, so Xero, and they put it into the cloud. So suddenly people could go on their laptop, they could go on their iPhone, they could go on their iPad, and they could access it from anywhere, which, as you can imagine, during COVID was also massive as well. That really got the market going. They got some leadership in there. That it started in New Zealand, went to Australia, and then the UK. So they became sort of the big driving force. And QuickBooks looked at it and went, okay, we need to do the same. So originally, Xero was ahead, and then QuickBooks went, okay, we need to do that. And now they've migrated to the cloud as well. So there's a cloud-based software for QuickBooks. I'd say nowadays they're pretty similar because they've caught up. You know, QuickBooks have a big budget. And when you look at an app that gets released to the market, so if you think of an iPhone and you get an app and it makes it slightly more powerful, that's essentially what an app is in the accounting space. So if you need something for, I don't know, your till system or HR, you get an app and then you bolt it into the accounting system. So that's where those two came from. And then Sage were always for bigger businesses, so people that understood accountancy. They had accounting teams, they're big turnover. They're moving towards the cloud, and they've got some really good products, but they're really expensive at the moment. So if you look at Intacct, it will cost you about £2,000 a month in membership fees, whereas Xero would be £25 a month. So if you're small, I'd say between QuickBooks and Xero, and I wouldn't say there's too much between them, Sage is probably for the bigger business, slightly more complex.
Great, thanks, Wayne. John, anything to add on your thoughts on differences? I know you're a Xero fan.
Yeah, I think it's the impact it can have on your day to day. I mean, when I had a food and drink business, we were on Sage for several years, and then moved to Xero, and suddenly, I always say it was an epiphany. We could see the numbers there and then. We could see what was going on, and we could see what impact we were having, just by, improving margins and focusing on those things that would have an impact. I think the other thing about it is that, as Wayne said, it depends on the size of the business or the complexity of the business as to which one is most suitable. And I think that's well worth having a conversation with other people to see what they do and how, if you've got, as we had, over 100 suppliers because of all the different ingredients and packaging we used, then it's important that you've got the things set up in the right way and it is robust enough to do that. Once you get very big and you're doing a lot of transactions, some of the packages like QuickBooks and Xero maybe aren't big enough for you, and you've got to move back onto something like Sage or similar to cope with that complexity.
Thanks, John. So if we can just continue with you, John, just looking at financial data, what should people be keeping their eye on? What should people be looking at?
And this is where things like Xero really comes alive, because the ability to open up your computer in the morning, I know we're going to talk about the dashboard in a while, but things like that dashboard, so that you can literally start your day by seeing what money's at the bank, and being able to see what invoices you've got to pay or which invoices are due to you, so that you've got that initial grip on what your cash position is. And then it's that sort of next step on to be able to say, well, if I want to do extra business, or I'm as Kevin was talking about, with things like ERP systems that integrate very well with these finance packages, not running out of packaging, not running out of cash, not running out of ingredients is really important, particularly if you've got a food and drink business that's seasonal, and it's having access to information that allows you to get a feel for the direction of travel, where you are, say, for a seasonal uplift, what your requirements are going to be, and where you should be margin wise.
Thanks, John. Kevin, anything you'd like to add on that in terms of
I
financial
think
data?
I think John's covered the majority of it. So again, cash is key, is king. Customers paying you, creditors, suppliers, you paying them. Stock, having the right amount of stock, not having too little, too much. So again, it's a big working capital requirement. But I would also add to that your VAT status. Have you paid it on time? Your PAYE, your NI contributions. Have you paid those on time? And are you making the relevant payments to the authorities to keep them off your back? So that's the key thing, is that there's a number of control accounts, that I would call it, and as well as cash, to make sure that you effectively run the business as a going concern.
Yeah, thanks, Kevin. So Wayne, whilst we continue to think about this, could you also sort of add in your understanding on how the accounting packages that we've talked about can help you to remember a lot of the stuff we should be looking at?
Yeah, definitely. As John mentioned a minute ago, you can set up a dashboard, and I specialize in Xero more than I have some of the other accountancy software, so I can't say so much about them. But I mean, on that dashboard, you can put your cash position. So as Kevin mentioned, cash is king. So that's the number one thing you need to keep an eye on in terms of where it is now and also where it's going to go in the future. In terms of the forecasting element, I wouldn't say Xero is quite there yet. You can use an Excel sheet, but it's really not as daunting as it sounds. If you map out what you think you're going to get in and what you're going to get out, that's essentially a cash flow forecast. It's not as scary as it sounds. You can also have key accounts on there. So if you have certain things that you want to keep an eye on, such as advertising spend, you can put that on there, and it's on the dashboard. You can just check it every time you log in. And if you've uploaded a budget, you can compare it to budget. So even if it's not you managing that section, you can say, okay, well, marketing are on track, or they're ahead, behind, etc. It also has debtors and creditors on the dashboard, so you can see who owes you money, who you owe money to. Obviously, people that owe you money, it will also give it the aging as well, so it'll tell you how old that debt is, and you can start to see if you've got a problem in terms of chasing that money in. So is it 30 days, 90 days, 180 days? And if it is starting to creep up, that's going to affect your cash flow, and that's something you want to sort out. So there's all that stuff, and you can put VAT on there as well. I would say the other thing to check is that it's not on the system itself, but maybe create a little checklist for yourself. So at the end of the month, you can go on there, you can run a profit and loss account, and you can run a balance sheet. So certain reports you always want to check in on, just have a checklist at the end of each month. You can go and run them and just check how the business is getting on.
Great, thanks, Wayne. And John, could you maybe add as well about how what good
Yeah.
look with this?
I think that the combination of the dashboard and the bank feeds that you can have, and bank feeds aren't just the bank account, but they could be your online accounts and what have you. So I think being able to see what that cash position is and get a feel for where it should be. And as Wayne said, you can put a budget into things like Xero, so that you can actually see, are we where we thought we would be at this point in the year, particularly when you've got a seasonal business. But also things like VAT. It could be that you're actually reliant on your VAT reclaim. And of course, if you're getting busy and you're getting tight for cash, being able to see this laid out for yourself does two things. One, it puts your mind to rest that when you're putting invoices on, you can see the VAT return that it's compiling there for you, sort of changing in real time, so you're doing it right. Second thing is, you might be looking at that VAT return thinking, I ought to be reclaiming my VAT monthly rather than quarterly, perhaps, just so that, and it's only because you've got it all laid out in front of you that you can see that. And just that final point that Wayne was saying about maybe having to do stuff outside it in Excel, I think one of the great things I find particularly with Xero is that you can actually drill down when you look at your P&L, and you can actually see how we allocated the right invoices to that product or that channel, so that we're actually getting a fair picture of our relative profitability or gross margin for that particular product.
Thanks, John. Kevin, could you just mention something about sort of reconciliations? Because this is a key thing that people find here.
Yeah. And that's the main point with probably the dashboards, is to reconcile your bank feeds. But again, when you reconcile them, it means posting them to the relevant codes, but also to the key accurate codes that you want to. So it's not just a matter of it going green to just get rid of it. It's got to be put to the most relevant place. So the key thing is to reconcile your transactions so that so your dashboard is effectively accurate. If you allocate them as they come through the bank, for example, you know what needs to be done. When you paying suppliers off, you allocate it against the right invoices, so you know what's due, when's it due. You're not paying ones in advance, and also your debtors, your customers, that when they receive payments, you allocate it against the right invoices, so you know that they've paid the right invoice, and also you know which invoices to chase when and where. So the key thing is reconciliation is the control to making sure that you effectively manage your business, and gives you the headspace to move to the next thing, which is probably strategy and budgets and comparisons.
Yeah, thanks, Kevin. So just thinking back to then this sort of like the setup of your accounting system, is that when you get your first customer, and what tips would you have around sort of setup of the system? So Kevin, maybe you could just continue.
So the first big assumption is to make sure the selling price, you've agreed, makes a profit, and it covers your overheads and absorbs them. So again, once you're happy that you've got a customer at an agreed price, you need to agree terms and conditions of the sale. So again, you're going to give them 30 days notice, 30 days credit or 15 days credit, and also possibly give them a credit, see what their credit terms are by running a credit score to see if they are good payers, or you're able to give them credit. Once that's been done, you set them up on a customer account in the system, enter in the full details, full name, address, credit terms, and a default nominal posting code. So for example, if you're going to make a sale of a coffee and you have nominal codes for certain types of coffee, make sure that the nominals are posted in the correct place. So therefore it enables you to run reports and get more detailed information from that. So it's the key thing is then you can on receipt of a purchase order, you can dispatch it, put the purchase order on, raise the invoice to the right codes, and then also just check as you step through the system that the output is where you expect it to be. So again and also when you set up a customer, make sure you run a creditors report, a debtors report, a customer to ensure that invoice is showing when it's due and it's filtering through to your reporting.
Great, thanks, Kevin. Wayne, could you add sort of some thoughts on your tips around sort of setup?
Yeah, and I think that the key thing for me is that when you're setting up the Xero, consider what you want out of it before you start using it. So in terms of, do you want to see your revenue mix? Do you want to see profit by product? And if you've got all that stuff, then you need to set up the chart of accounts in a certain way. So if you want to see the revenue mix of all the different types of sales, then don't just post a sales code. We need a different code for each one. Advertising, you might want to split out pay-per-click costs, cost of shows, publications. There's all those different things you want to see. Even wages, really. Do you want that to be direct costs or overheads? So if they're direct, they're related to making that product. It's going to be part of the cost of making it. Whereas if they're an overhead, they might be an accountant, marketer, that type of thing. So I'd say that, and also connect your bank straight away. So when you set up Xero, connect your bank or QuickBooks, whatever it is. And then also there's an app called Dex, which is worth looking at. So that helps you get your supplier invoices on the system. And obviously, if you can get your supplier invoices on the system from day one, you can then reclaim your VAT quicker. So if you are, if you don't pay VAT on sales, but you claim it on inputs, then you want to get that in as soon as you can. So all of that. And the last thing I'd say is sales invoices, just make sure the terms are on there. So you can get the terms to make sure people know when to pay you, and also put a pay now button on, because you can do that and just make people pay you a little bit quicker.
Thanks, Wayne. John, any setup tips?
Yeah, I think there's just pick up on a couple of those points there. I mean, terms and conditions. What you have to assume is that particularly if you're putting a new customer on your system, apart from asking them to pro forma the first or couple of invoices, it's well worth ensuring that your T's and C's are clean, legal and decent, because what you don't want is to be dealing with a wholesaler 6 weeks in and or debt recovery and finding that because you didn't have the right T's and C's from how you've set up your accounting system, you can't actually generate a debt recovery. Knowing the difference between fixed and variable costs here, and making sure, like we mentioned there about sales and marketing. Sales and marketing may generally be a fixed cost. So as a ledger code, it sits down in the bottom of the P&L and is applied as sort of, from your point of view, you're looking at it as an overhead that all sales have got to recover. But it may well be that you've got particular accounts, say a major multiple retailer, where you've got sales and marketing costs that are directly related to that. So those want to be a variable cost, because you want to look at that, as Wayne was saying, as part of that gross margin for, are we profitable with that customer? And that's that point about ledger codes, is making sure that you're allocating costs to sales in such a way that when you start to do the analysis, you can see, to serve that customer, we know that we've got all the costs that are appropriate for that. And it may even be some specialist packaging or some sales and marketing because it's peculiar to that account. And that's really the beauty of the accounts package, is being able to split stuff out so you can actually see that, you can answer that question. Let's do more of what works and less of what doesn't.
We actually had a client that was really doing well on revenue, and it came to us, it done somewhere, not making any money. And we did an analysis of their gross profit margin, and they were making a gross loss. So they were driving revenue, but they weren't selling the product for enough money. So they're making a loss on everything they sold. So, I mean, that's an extreme case, but, it's important to know.
Yeah. And particularly where you've got different, so the same product may be making its way out into the market in different ways. It might be in a major multiple retailer, it might be going through a wholesaler, it might be going online. And of course, you've got different costs associated with those channels. So being able to assess the costs of sale peculiar to those channels is really important.
Thanks, John. How does a system know where to allocate receipts and payments? John, could you maybe continue on that then?
Well, yeah, this is where Wayne and I finish our debate out in the car park normally, because as he's already mentioned, you've got something called DEX, which is a 4-letter word. It's formerly known as Receipt Bank. That's great for automating very simple bills, invoices, where you want to allocate them to a ledger code. But for £30 a month, you can also misallocate stuff yourself. So it's really important with automation that you actually do set these things up so they do allocate the cost where you're expecting to find it. Because as I know from dealing with accountants in the past, just putting several £1,000s in the suspense item and thinking, oh, we'll sort that out at the end of the year is not one way to ingratiate yourself to them. So I think automation is great, and getting these systems allocated. The other thing is, and I think we mentioned it earlier, is to make sure when you're doing bank reconciliation that, as Kevin pointed out, that the trick here isn't just to turn everything green. The trick here is to allocate stuff to see where it goes. And one of the things I always say is it's about touching the numbers. Instinctively, if you've processed invoices, you've allocated them, as you've seen, you've paid them off on the bank statement. The great thing is that you know what stuff costs, and that gives you that inherent feel for the direction of travel for the business. It isn't just about making invoices and numbers go away. It's actually having a chance to see and view them and get a feel for what's going on there.
So Kevin, could you maybe just add something, and particularly I'm just thinking about rules.
Yeah, so the key thing I'd say to John is understand your numbers first, do it manually to understand where your cost base is from, and then look to automate it by rules. So if you have a post office direct debit every month at £400 on the 15th, that you're going to post it in the right place, you claim the right VAT for the first few times, but then you can build rules within a number of the packages to actually say, right, okay, it's got the reference of X on the bank feed, it's always £400 a month, so it posts it automatically. The key thing is the rules you've got to check that they are correct, because otherwise it just snowballs month on month on month, and it's only until you get to the end of the year you'll end up having to reallocate or redistribute the cost basis, which can paint a very different picture to what you've actually think you've worked with for the last 12 months.
Yeah,
And I think
really quickly on there as well. I see this all the time from our clients. They cash code, and what that means is that the bank feed comes in and they say that goes to sales, that goes to this purchase, that goes to that purchase. Get the invoice in the system, because if you don't know what creditors you have and you don't know what debtors you have, so you don't have that visibility. Not only that, HMRC require you to have the invoices in there to reclaim the VAT. So just don't cash code. That was what I wanted to add.
Yeah.
That's a really good point. And I mean, I always make the golden rule of scanning in the invoice and then putting that up as a PDF, so that when you put that invoice on the system, you got the physical copy on there as well. So you can always afterwards, 9 months later, when you're thinking, what the hell was that bill for? You can split out vehicle expenses. You can tell the difference between what it costs to service a van and what it costs to get the forklift approved for another year. You want to be able to look at the invoice and say, I can see what that bill was for now.
Thanks, John. So we've covered quite a lot of ground. Potentially all seems quite overwhelming in terms of people's current use of a system, and then what they feel maybe, what do I need to look at? What do I need to get into? Where can they get help? So Wayne, what's your perspective on this?
I think there's different areas. So when I talked about the expectation gap earlier, there's a few things you can have. So you can go to your accountant and they can set you up, they can give you some training. You could also get a bookkeeper. So again, just make sure you're getting a good bookkeeper, because some of them are better than others. So that some of them will just post stuff blindly, and some of them will actually look at what they're doing. You can get outsourcing. So that's something, for example, Old Mill offer, where we would just take over everything, have a meeting with you, and in that way it grows as you grow, sort of grow the team as you need to. But if you fancy doing it yourself, you can go onto YouTube, loads of videos on there for the different cloud accounting softwares. And then also there's the help section as well. And then other than that, it's the sort of, the forums and the Facebook groups. There is loads of stuff out there in terms of if you want to do it yourself as well. But just be careful. I'd still get advice. But if there's something you need to know, like just how to post something, then go onto YouTube and grab it.
John, what could you add to that as well?
Well, yeah, and I see that in the chat that the question's been asked about, are there any books for this? There are loads of books. I'll tell you what I found really helpful is the help function on Xero and the forums that come up, because they very often answer questions or put your mind to rest that there is a glitch in the system, and that somebody's looking at it, and it's going to, particularly if a bank feed disappears one morning, is it just you, or is it the whole world's lost the bank feed? So online help, as Wayne said, can be really helpful. I also think it's really useful, particularly when there's user groups around. If you can talk to other people who are in a similar situation and pick up some of the sort of learning that they have, that can be helpful. And of course, obviously, we've got between the Sustainable Scale Up cluster, we've got particularly for integration of ERP systems, we've got a lot of help we can give in that area, as well as the Investor Ready program, which of course has been helping people set up their account systems, make sure that they've got the ledger code sorted out, but also then to help people with that sort of routine of what should I do and when should I be doing it. And sometimes this stuff, it's just getting into good habits, not avoiding it, literally making it the first job of the morning, because once it's done, you know what to worry about, or you know that you don't have to worry, and you can crack on with the rest of your day.
Thanks, John. Kevin, any last sort of comment from you?
So the last thing that just has been covered here is depending on your system package, you can actually enhance your support function. So instead of paying £25 a month, you may be paying £45 a month, but Xero or Sage or QuickBooks are there on the end of a call between 9 and 5. So again, it's an additional cost, but is it something that you want to have as a safety blanket? So again, there is also those options, and I say the internet and the forums and YouTubes, there is a lot out there to give you an idea, but just check it is good advice. It's good advice to how you are running your business.
There is a way of contacting Xero support as well, which is sometimes a little bit hidden. So if you do go into the Xero Help Center, search for something, whatever it is you're looking for, and then it will give you an article. And if you scroll to the bottom of that article, it normally says contact Xero support. So it tries to make you find your own answer, and then you just go to the bottom and you can just contact them and they normally get back to you.
Well, thank you very much, panel, for that. That's been hopefully insightful and thought-provoking for people. I just wanted to first to follow up on Christian's comment about the book recommendations. As part of Sustainable Scale Up Cluster, we've actually pulled together a financial awareness course that is over a series of videos that you can watch. So if you've not seen those, it's probably worth dipping into that, and we can share that. But as with all of these things, I think one of the key sort of ways that you can be supported going forward is just to pick up the phone and have a conversation with your Sustainable Scale Up Cluster manager, whether it's Kevin, whether it's me, whether it's Win, whether it's Joan. Sort of that we've got a number of people that you will all have different levels of contact with. Just pick up the phone and sort of they may well be able to answer or point you in the right direction. So we're here now. I guess we've got a few minutes left just to pick up any questions that what we've discussed so far has raised. So does anybody want to ask a question?
Yeah, I've got so how I run sort of my business is I've got like different bank accounts. So I have an income bank account where all my business income goes into that bank account. And then from there, on the twice a month, then I divide it into separate accounts. So I'll put like a minimum of 2% into a profit account. And then I'll put 60% into like operating expenses, where all of my outgoing bills go out. And then I have owner's drawings and a tax account. So I'm just wondering what your thoughts are on that.
Wayne, maybe could you respond to that?
Yeah, that's fine. You can connect more than one bank account to these pieces of software. So you would have all of your bank accounts on there. And then when you transfer from one to the other, you just treat it as a transfer within Xero. So you just see both sides in both accounts. So it's absolutely fine to work like that, and it can cope with it. Yeah,
because I have them all linked on Xero and everything. I was just wondering if you've ever heard of anyone doing it like that. I'm not sure.
I mean, I have. It's not essential, but I suppose it's nice and it breaks it off for you. So it's a good management, and if you're happy to do that and manage all the bank accounts, then I don't see an issue with it.
Okay, thank you.
Yeah, I've seen that, Kristen, that before we had an operating account and then also a strategy, accruals and tax to pay the tax at the end of the year. So you kind of put away, as you're making the profit, you put a bit away for the tax man to pay in 9 months after the month end, so you know that it's there, but also you use it there if you have an investment opportunity that there's always kind of a pot there you could raid.
Thank you.